The Caribbean is perhaps the last place one would look if you're conducting a case study on financial innovation in the international capital markets. Yet in the past 5 years, the Caribbean has been a hotbed of financial innovation, pioneering a number of significant initiatives, which were the very first of their kind in the world. In our previous podcast on financial innovation, we highlighted two such initiatives: the issuance of the Bahamian Sand Dollar and the Eastern Caribbean D-Cash. These were respectively the first and second issuances of central bank digital currencies in the world, something that many more developed countries are still only debating. In today's episode of our podcast, we turn our attention to another milestone in Caribbean financing and international capital markets, one that created waves internationally when it was consummated. Today, we'll be examining both the catalysts as well as the mechanics behind the Belize government Blue Bond. The bond is widely considered to be a landmark example internationally of a debt for nature conservation swap. So what is a debt for nature conservation swap? In its simplest formulation, a debt for nature swap is a financial transaction in which a developing country's debt is reduced in exchange for a commitment by that country to either conserve certain aspects of its environment or to expand funds on environmental conservation projects. So what was the catalyst for the Belize's debt for nature swap, and what did it involve? Over a period of 20 years, the Belize government had engaged in significant borrowing in the international capital markets. During this period, due to over-leverage, the government had also been involved in several debt restructurings. By 2021, Belize had accumulated a large commercial debt amounting to approximately US $553 million, with a total debt burden for the entire country exceeding 130% of GDP. With reducing fiscal space to maneuver and exacerbated by the COVID-19 pandemic, the Belizean external debt became unsustainable, so that by 2021, the government of Belize found itself in the unenviable position where it was unable to meet its coupon payments on its external debt. The net effect of all of this, the sheer size of Belize's external debt, the limited space to maneuver fiscally, and the challenges of managing the COVID-19 pandemic, led to a major loss in confidence by international investors, with the international debt of Belize plummeting in value, so much so that by November 2021, Belize's international debt was trading on the international markets at 55 cents on the dollar. Serendipitously, with Belize's deteriorating economic conditions and its plummeting value of its external debt, there was also growing international and domestic concern about Belize's marine ecosystem. Belize has the second largest barrier reef in the world, and it's a biodiversity hotspot, with international conservation groups arguing that Belize lacked the financing to properly protect its marine areas in a sustainably efficient manner. Some say that luck is where creativity meets opportunity. Others simply state the obvious, that necessity is the mother of invention. Well, boxed into a corner as they were, Belize had to come up with a creative solution for its financial quagmire, and it had to come up with one very fast. Having restructured its international bonds at least 3 times in the previous 10 years, the bond market was in no mood for another restructuring. This is where the Nature Conservancy comes in. What is the Nature Conservancy? The Nature Conservancy, or the TNC as it is sometimes called, is a US-based global environmental nonprofit organization that works to conserve the lands and waters essential to life. In the area of conservation, it is one of the world's most effective environmental organizations, operating in more than 80 countries presently. Having piloted a blue bond for Seychelles, the TNC proposed using a similar model to help Belize refinance its debt while locking in long-term commitments to ocean conservation. So what did the financing structure in Belize involve? In November 2021, the TNC completed a landmark deal in which it provided the Belizean government with US $364 million blue bond via a Belizean special purpose vehicle called the Belize Blue Investment Company. The $364 million in bond proceeds from this loan was then used by the Belize Blue Investment Company to purchase the US $553 million bond from existing bondholders. The reason that the Belizean company, the special purpose vehicle which we mentioned above, was able to repurchase the entire outstanding debt of US $553 million for only $364 million was due to the fact that the Belizean international debt at that time was trading at 55 cents on the dollar. The net effect of this exchange resulted in a significant saving to the Belizean government of roughly US $189 million in principal value. Just as important and as significant as the savings in principal of US $189 million, TNC was also able to secure an insurance wrap from the US International Development Finance Corporation for the Belize Blue Bond. The insurance wrap from a US federal agency meant that the blue bonds received a much higher credit rating than the Belize government would have otherwise received. This resulted in lower coupon payments and allowed the bonds to be attractive and eligible to US institutional investors such as pension funds and insurance companies. This ultimately reduced the overall cost of financing to Belize significantly. Compared to the original Belize bond, or the super bond as it was called, the new blue bond came with more favorable terms, including a 19-year maturity profile and a 10-year grace period before principal payments began. As a quid pro quo for these significant concessions, Belize committed to a broad range of marine conservation agenda, including its agreement to protect 30% of its ocean waters by 2026, the establishment of an independent conservation fund, and the dedication of a significant part of its savings from the refinancing towards nature conservation initiatives. In a nutshell, this pioneering bond transaction, in one fell swoop, led to a reduction in Belize's external debt burden by the equivalent of 12% of the country's GDP, whilst at the same time unlocking long-term sustainable financing for ocean conservation. Additionally, and at the same time, it committed the Belizean government to concrete environmental targets. So what is the key takeaway here? The Belize Blue Bond exemplifies how small, nature resource rich, but highly indebted Caribbean countries can, under the right circumstances, convert unsustainable external debt levels into long-term financial stability and sustainable developmental goals. With immigration from the Caribbean and other highly indebted Central American countries to the US being one of the current hot button topics on the US policy agenda at the moment, maybe the time has come to consider a debt for immigration swap, one in which the Caribbean and other affected countries receive concessional financing from international development agencies and others in exchange for taking concrete steps to curb illegal immigration to the United States. Something to think about. A word to the wise.